banks will be able to set up specific facilities for specific needs. And sometimes those are tied to the structures of underwriting that go with those different scenarios. So say, for example, you're looking for, asset-based equipment financing. If you are looking for a revolver or a line of credit. So there's different tranches to private credit or private lending. And oftentimes traditional bank will take their approach to those different areas. We're private and will underwrite it accordingly. We'll have their own set of covenants, and their covenants are very bank-like, right? On our end, we essentially can cross into all those different areas and really look at it as a end-to-end solution for the company's needs. So we don't need to or look for just one area of the business. And let's say it's purely, asset-based lending for this specific project. We can look at it as a whole. We can underwrite based on current state, but also based on the forward-looking projections.
Hey, everybody. Welcome to the Going Beyond the Deal podcast. Today on the show, we have my friend, George Alifraggas, Senior Vice President at Metropolitan, one of the leading private debt providers in the country. We're going to get into everything private debt, give you an explanation of it, who it's for, what it's used for, and how it can be a really cool tool in the capital stack for you. Additionally, we're going to get into some of the habits and some of the secrets of George's success in his career. I'm really looking forward to you joining us here, and I think you're going to get a lot out of it. Welcome to Going Beyond the Deal. Before we get into this, I like to kind of start by saying, like, how did George and I, come across each other? So George is a senior vice president at Metropolitan, one of the leading private lenders that are out there, headquartered in New York City. George and I met randomly at a networking event at this beautiful garden in New Jersey. And what tends to happen for me is when I see other fit guys that obviously pay attention to what they're doing, I'm drawn to people like that. And I'm like, okay, so what are you doing? Like, how can I get a little bit better? So George and I quickly connected over the love of, I'd say, personal development, trying to get better every day. And then he also has something that I really look for in partners and friends and colleagues is you cheer people on to see them win and want to see people win just as badly, if not more, than you want to see yourself win, right? And that's a huge key to success. And that's why we've had such great interactions so far. So without further ado, my friend, George.
Thank you so much for having me, Michael. This is an absolute pleasure. I love that you are putting together this podcast and bringing it to life and going to market with it. So just grateful for the opportunity to have a conversation together, catch up, and talk about all things private credit.
Cool. Well, let's get into a little bit of background about you. I mean, the one thing that I thought was really, really impressive when I met you was that this was not like you didn't go to school and, start your career and say, hey, I'm going to get into, leading the charge on private credit. You have a ton of operations experience. And I mean, at a very, very high level. So can you get into, before we get into private credit as a tool, what it's used for, let's get into your background, kind of. Where were you? Where did you get started? Where were you born? Where'd you grow up? Can you get into some of that for us?
Yeah, absolutely. So briefly on my end, born and raised in Montreal, Canada. So a Canadian by blood. Both parents are entrepreneurs, immigrant backgrounds. I essentially grew up in their businesses from a very, very young age. I was the baby holding the pizza box in the Yellow Pages ad, and just continued really learning about the importance of small, medium business, what it takes to actually succeed, and all the blood, sweat, and tears that goes into it on a daily basis. From there, I went into the corporate world. So to your point, I have actually a lot more of an operating background. Always focused, I would say, on growth with brand, pipeline, revenue accountabilities across middle market and large enterprise companies. Prior to joining Met, I was the chief operating officer of a global tech company. We sold to private equity in 2023. And before then, like I shared, originally from Canada, where I was leading one of Canada's largest independent telcos, and we sold to TELUS, which is a public company, which essentially accelerated my move to Miami. So I'm now based in Miami, but I have the pleasure of coming back and forth to New York every 2 to 3 weeks. So fortunate for that setup as well. It wasn't designed that way, and I get to experience and live the best of both worlds. So very grateful for that. But to your point, my background is very much anchored in being an operator, and not so much underwriting. Definitely not, the space, very important space you're in. So it allows me to bring a different perspective to the table.
Very cool. Very cool. So how did you find your way into those, corporate positions? I mean, where did you go to college and how did you kind of transition into that spot? And I also wanted to ask, what was the family businesses? Was it really a pizza shop or?
It was. So background is a mix of Greek, Italian, and Irish. So a lot of restaurant businesses and real estate, essentially. Um, so what's interesting is I've always worked from a very young age, but I always really loved learning, and I loved learning at school. And I was a bit of a geek. Someone got bullied on, which is fine. But it's because I was just always curious. I was very much curious, George, always asking questions, looking to understand why. And what made it really interesting is I was able, especially as I got into business school, so I went to John Molson, I was able to really understand the theories that were being taught to me and actually see them through the life of application, across my parents' businesses, but then also at Bell. So at Bell Canada, joined Bell in the small medium business space, corporate account management. It was supposed to be a 3-month internship. It turned into a 13-year career. And I absolutely loved it. I really got to grow within the various roles. I got to meet just incredible people, got to work with incredible people, learn from them as well. So that was awesome. And yeah, so my world and experience and background is geared towards TMT, so technology, media, and telco, and that's the world I grew up in, and I still love and adore. So private credit was, I would say, a career pivot slash career transformation. It was not part of the career roadmap by any means, but very happy that I'm here today, and that it ended up being part of the journey, because it's been incredible since for the last, I would say, 18 months now.
Nice. So how did you land? How did you land in the private credit market? How did you go from, I mean, obviously, you went through, and based in what you said, two different exits, you were part of that, a large part of that, those two exits. And then, how did you end up in the private credit space from there?
So long story short, I was headhunted by Zaharo, who's not because she headhunted me, but who's probably one of the best recruiters I've ever worked with. And Metropolitan was looking for a senior leader to join the operating network team. I, at the time, had exited, I think it was 2, 3 months in. Definitely not ready to play tennis or golf for another 20, 30 years. So I was exploring a number of opportunities. Very actionable ones were with Deloitte in the TMT space, and then another global automation player,
Hmm.
again, specialized as a senior partner for the TMT space. So those
Hmm.
were the threads and where I was able to bring some of that expertise and track record. And Metropolitan or private credit was very much the alternative, different path that, again, I had not considered, that was very different from the two. And that's the one I ended up selecting and going with.
Very cool. Very cool. So, it's funny. I recently just interviewed a guy that has a 100-year-old chemical manufacturing company. So I have to say, like, here, take 10 steps back and explain this to me like I'm a kindergartner. But you know, as you know, I've spent I had a 20-year career in commercial banking, corporate finance. So I have a good idea about banking and finance, et cetera. But the private credit market is something that I always kind of heard about, but it wasn't something that I ever went to because it didn't really fit within my box. Could you explain, at a very high level, what private credit is, and then kind of get into some of the use cases for it so that people have a good understanding of it?
Absolutely. Um, so what's interesting is similar to you, I had very little, well, I would say for myself, I had very little exposure to private credit. Definitely no, hands-on experience from a commercial banking like yourself. But the way I would explain private credit is quite simply direct, flexible capital, and or direct lending. Private credit at the core bypasses or is an alternative to traditional banks and is in a position to provide customized financing solutions to small and mid-sized businesses. Obviously, there's also private credit firms that specialize in a much larger space as well. And it's an alternative means whereby the financing solution can be highly tailored, in certain cases, fully bespoke. And it's one where oftentimes a private credit firm can move a lot faster and again, tailor it to the specific business needs. Um, what I enjoy and what resonates the most with me relative to private credit is that it's a very relationship driven partnership.
Yeah.
So, what I mean by that is, unlike traditional lending rigid structures, the strong private credit firms, anyways, act as more of a strategic partner. So, we're able to offer not just capital, but also industry expertise, operational support, and really act as a partner to help scale. Which, if you think about it, goes way beyond traditional banks. And again, we're not there to replace traditional banks. We're there to help complement, augment them. But that's how I would categorize in the simplest terms private credit. Um, and then to answer the other part of your question, where I feel is the greatest use of private credit is when you are leveraging it as true growth capital. So, in the close to 20 years as an operator, debt is a very powerful tool when used properly, right? So
Mhm.
I always like to tell the prospective CEOs that I meet, as long as you are leveraging private credit or private debt as growth capital, as a means to catalyze growth and not to keep the lights on, you are leveraging it in a very constructive and meaningful way. And it can be a very powerful alternative to equity based financing. And that's why it's one that I think is definitely worth understanding, worth considering, and playing a growing role in financing not only businesses but the new economy as well.
Can you just give it like I would say like kind of a down the fairway classic example, and if I'm going to be a little bit specific here, just
Yep.
because I have a large network of commercial bankers that listen to this and everything, and I want them to have an understanding of, okay, this is going to be outside of their box because of ABC. Why is it in your box? And just give a real life example for that growth capital. I already know the answer to this, but I'm hoping that you could shed a little light on this for us.
Yeah, I mean, I'd love to also hear your experience and perspective on this. Where I see we play a complementary role is banks will be able to set up specific facilities for specific needs. And sometimes those are tied to the structures of underwriting that go with those different scenarios. So say, for example, you're looking for, asset-based equipment financing. If you are looking for a revolver or a line of credit. So there's different tranches to private credit or lending, private lending. And oftentimes the traditional bank will take their approach to those different areas. We're private and will underwrite it accordingly. We'll have their own set of covenants, and their covenants are very bank-like, right? On our end, we essentially can cross into all those different areas and really look at it as a end-to-end solution for the company's needs. So we don't need to or look for just one area of the business. And let's say it's purely, asset-based lending for this specific project. We can look at it as a whole. We can underwrite based on current state, but also based on the forward-looking projections, which is very rare for banks to be able to do. So where we're able to often help concretely is you have a growth stage company that is at an inflection point in the J curve. They are not, they're looking for capital that a bank is essentially either tapping out to or not really comfortable in extending as much capital for those endeavors, and or requesting, a number of different, personal guarantees and or, different endorsements and collateral that go with it. On our end, we will be in a position to go a lot further, provide a lot more flexibility into how we structure it. And oftentimes, let's say in the next 2 or 3 years, you can then graduate and get refinanced by a traditional bank, for whatever is left on that facility, and that's where you can self sufficiently keep managing and scaling and funding your growth. So those are the intricate ways that we play versus traditional banks.
Yeah, no, that makes a lot of sense. I mean, I think it's always, to me, it's been just a good alternative to equity financing.
Oh yes.
And when I think of it from just a really simplistic standpoint, I think of something like, hey, you know, from a geographic standpoint, like, hey, if we opened up another facility in this part of the country, this would end up saving us this much on transportation,
Mhm.
all of these different things. And the bank would say, a traditional commercial bank would say, okay, well, where's my collateral? Where's my historical financials? Where's all my personal guarantees? Does he have the financial wherewithal to go through these things? Whereas in the private credit market, it is, like you said, relationship based. And I could say, hey, George, I have a company here that's looking to make this initiative. If they make this initiative, they're going to be able to grow based on this.
Mhm.
You have the industry expertise. If you're familiar with that, they can say, oh, yeah, if they did that, that would definitely work. And this would be the way things would play out. So for me, it's a great tool for and I have to make this very clear. A lot of people would think private credit would be for a company that's not doing well. And it can be,
So true.
right? It can be for the right players, right? But what separates Metropolitan, I think, is you guys aren't looking for necessarily turnaround situations. I
Yep.
mean, you might be
We're
able to
not.
help in those things. You are truly there for growth capital, and it's really just complementary to the existing, commercial financing. So super super helpful. I just think it's beyond the level that most people understand. But if you have a strong operating business, time is and working with a commercial bank, time isn't always on your side,
So
and
true.
it
And
can
I
be
think
very,
you're
very
spot
tough.
on though. We're very complementary to banks. We don't look to displace them. They serve a very important role. We are looking to act as a growth partner to that business, right? In an end to end one where we can potentially help them with both organic and inorganic growth. Um, and again, in a way that is scalable, right? So if they're looking for X capital in the next 2 months, we can tailor the solution, in accordance with that milestone, and then keep upsizing and or scaling it, whereby they know that after that period, they need another, Y capital. They can rely on us to access it, and that can be baked into the overall facility and initial structure. So these are all elements that are very different to how a bank would approach putting together the facility. So I think two other quick notes to just clarify is, to your excellent point, sometimes to keep it simple, it's very much an alternative to equity based financing. It
Yeah.
is much less, if not, so much less dilutive, sorry, to equity based financing, and normally a lot more flexible, tailored, and scalable. And if you think about it, and the numbers speak for themselves, but debt, when leveraged for growth, is always cheaper than equity, right? So
Yes.
if your business is actually scaling and growing, and you're at the right stage where, like you said, the business is operationally sound, then oftentimes the private credit path, will actually be a lot more cost effective than pure equity. But again, it all, like, the cap table is very unique to each business. So hence why all of our structures are unique, and equity based financing can also apply for certain areas within that growth structure and or within the future of the business. But as a whole, debt is always cheaper than equity.
Yeah, for sure. For sure. That's a good point. And I don't think I can say it enough times, and I think I'm hoping that this will be one of the big points that people take away from this, right? Is, you know, I know from, working in the commercial banking space for a long time, it is very relationship based, but at the end of the day, as a banker, your hands can be tied, right?
Yes.
Because of the regulatory issues. And, unfortunately, I've also been in the situation where, you have one certain industry that doesn't do well. And then all of a sudden the bank just says, okay, we're not doing that industry anymore. And even if you're the best best at what you do, it doesn't matter. Just because you're in that industry, they'll just say, okay, no, we're
That's so
no
true.
longer doing this. Here's 90 days for you to get out. Right. But I've also seen if somebody trips a covenant, something happens, they're like literally going to take your firstborn. I mean, like they will, everything's leaned up, personal guarantee, they're coming after
Yep.
you. And then in the private credit market, the biggest difference is it's a relationship to say, okay, we believed in you to get into this. How can we work through this together as a team, right? You guys aren't looking there
Spot
to
on.
take their house, take their shore house,
Absolutely not.
everything like that. It's like, how can we both get out of this as cleanly as possible? You're not in the business in collections,
No,
whereas a lot of banks, they have a whole department based on that. So
that's so true. And that's such a huge um, misconception or misunderstanding, because you're absolutely right. What I really appreciate with Met and with the private credit world as an operator is that private credit understands that growth is not always linear. So
yeah,
we expect to go through the twists and turns together. And
yeah,
that's where the flexibility comes in, whereby, if things don't go exactly as planned, sometimes they go better, sometimes they don't go exactly as planned. We will try and figure out the right approach to help you get through that twist and turn, right?
yeah,
And then to your point, to make sure that we all come out of it, successful and winning, and or sometimes we actually come out of it even better.
yeah.
And if we can, that's definitely the goal. So not a loan to own shop, especially not from our perspective. Otherwise, I would have joined. And that is rarely the case with private credit. We're really looking to back companies and helping them grow asset value, and then as a byproduct grow enterprise value. And that's really also the differentiator that we bring to the market.
I know we talked about this a little bit, when we were pre-planning for this. I mean, there's been a significant change in the past 5 years in the capital markets, right? I mean, just as far as the cost of capital, et cetera. I mean, like at one point in time, it was basically free, right? And now we're in a much, different position. What trends are you now seeing in private credit? I mean, it's not doesn't seem like it's quite as expensive as it maybe once was, right? Because you're getting closer to like the cost of, traditional capital.
It's a good question. So I think a few things. I think if you are so a few things come to mind. So let me answer the trend question first. So
Yeah.
from my point of view, anyways, I'd say private credit is the future of financing. It's probably positioned to play an even more critical role in business financing, with projections showing sustained growth across a number of different sectors. And I think it's going to keep growing the more business owners and companies better understand the private credit vehicle and path that they have. The private credit AUM is projected to reach, I think, close to 3 trillion by 2030. And the ABF part, which is asset-based financing, is projected to grow over 5.5 trillion. So there's still even a lot more room to grow on that front. And that just further confirms, the real need for private credit across a variety of different industries and also
So it's
across a variety of
essentially,
different
I'm sorry,
stages.
that you're doubling what it is now. It's around
Yep,
1.5 trillion now.
correct.
And you're saying it's going to double in the next 5 years.
Over the next 5 years.
And
Exactly.
what do you attribute that to?
It's combination of traditional bank like lending tightening further,
Okay.
and also having public markets go through an interesting array where volatility will go up and down, but private capital is going to now start becoming a more powerful alternative to public market access also.
Hmm.
So as businesses now start turning to private credit as actually a more predictable relationship based financing arm, it will keep growing and scaling. Because what's interesting and what some folks don't realize is a lot of our portfolio companies CEOs end up working with us because we can deliver certainty of close. So if they are looking to really go all in on their growth strategy, if they're looking to acquire specific targets as part of inorganic growth, they will often work with us because not only of flexibility, but also certainty in closing and being able to deliver that capital, and not have to constantly be managing, let's say a bank like facility, and or overly relying on equity based financing that sometimes can either pull out and or tap out. So those are some of the different reasons as to why it'll keep growing.
Very cool. Very cool. No, that makes a lot of sense. So, I mean, what advice would you give to, small to mid-sized companies that might think about, leveraging the private credit market?
Good question. I would say, um, first and foremost, seek to create optionality for your business and also for your hard-earned equity. Again, having been an entrepreneur and very much still entrepreneurial, we're the ones who put in the blood, sweat, and tears every single day. So keep that in mind. The other point of advice that I would offer is, don't wait until you need capital to explore and learn more about private credit. Understand the different financing options now, so you can move quickly when growth opportunities arise, because that's also the reality for small medium businesses, is that sometimes there's a certain growth opportunity that wasn't necessarily part of the plan,
Mhm.
which could completely change your trajectory. So understanding of the different paths you have and having some relationships established in that space will allow you to act on them, right? And
Yeah.
the key is really building relationships with firms like Met, but also like DVD partners. So when it's time to scale or invest in the business, you have paths that are available, rather than being limited. Um, and lastly, I'd say, or I'd argue, it's really the owner, as an owner and business leader, it's really your fiduciary responsibility to explore alternative options. So
Yeah.
in that case, you're really allowing yourself to make the most informed decision for your growth and also for your company's growth.
I think that's a really good point, is like not waiting till you need it, right? But just having the foresight and understanding, okay, when are we trying to exit? What are we trying to do? What levers can we pull potentially now to have a more successful exit in the future?
Exactly.
I mean, the one thing that I constantly approach George and Metropolitan with is acquisition financing, right? Because that's a huge tool, that's out there. And I mean, unfortunately, right, you can use other providers that are out there, but I mean, companies that have been around for a long time, have been growing responsibly. They're well beyond SBA debt,
Oh yeah,
financing and things like that, right? Where they need a more sophisticated, partner that can, help them see, hey, what is that multiple expansion that you're going to get by acquiring this target company, et cetera. And I feel like the combination of working with a Metropolitan and a DBD investment bank, et cetera, together, that's going to help you know what's this going to look like, 2, 3, 4 years from now, and how that could really maximize your exit.
absolutely. That's really well said. And I think what's great too with these types of partnerships is you really work alongside the management team in co-creating those projections, challenging one another, seeking to understand if we've thought of all the different scenarios, are there specific or certain blind spots that we haven't necessarily considered on both ends. So it becomes a very collaborative endeavor, which in my mind is refreshing, right? Because when I think of other, financing options, that's rarely the case. It's usually more, them sending a list of things they need and then you getting an answer and or getting more questions, relative to whether or not they'll be proceeding. When working with private credit and investment banks like DBD, it's very collaborative. We're seeking to understand what ultimately the company is looking to achieve. I always look to understand, what is the management's team North Star? So what are we working towards? Like, what is the ideal end goal and end state, right? Are we working towards an exit? Are we working towards a certain revenue or EBITDA milestone? And then how do we get there? Right. So,
Yeah.
so again, that is from my experience, a very different approach and experience compared to other financing options.
I think that's another really, really good point, because I can just say from my own experience in that there was never that North Star at the end of it. Like, okay, well, what's going to happen? What's going to happen if this happens? What's going to happen if that's happened? And the biggest difference in working with a Metropolitan or a DVD is it is very, very, very hands-on, and it's not, hey, here's the boxes you have to check.
Mhm.
And that's essentially what banking is. It's like, okay, we have an underwriting policy. We go through that underwriting policy, and if it doesn't fit within our policy, then it's a no go. Completely different. Completely different when you're working with the private credit market, for sure. Um,
Exactly. We often from our end say we're working towards a yes versus getting past no. And we can only do that the more we ask the right questions, the more we bring on, expertise
yeah,
to really speak the same language as the management team, understand the
yeah.
challenges they're going through, understand the challenge they're looking to solve, and find creative ways in helping them solve it.
And the one thing that I would say that as a compliment to Met and the rest of your team, you guys have a great team over there. Is
You really, Joe.
and it's the same as DBD, right? Is we're in the business for a quick yes or a quick no, not a long maybe. So if it's not our flavor of ice cream, we'll be happy to tell you right off the bat, like, hey, we're not really interested in this. But the one thing that I know George does for sure, and I know I do as well, is like, hey, it's not my favorite flavor of ice cream, but I know somebody that loves that flavor.
Yes,
I'd be happy to make that introduction for you. And it's super
absolutely.
collaborative. That's how we're getting a lot more things done together.
Absolutely. I mean, so you're absolutely right, and that's part of the role that I have is supporting our broader ecosystem. So to your point, which aligns with the ethos of Med and private credit, very relationship and partnership driven. So if it's not for us because we're not able to creatively structure the right solution because we don't feel it actually helps solve the problem at hand, we will do our best to see who else in our ecosystem could potentially help.
Yeah.
And or what I've also seen our team do, which I've never been on the receiving end of that before, is we will share with you, a few items that say, hey, if you're able to achieve the following and or do, X, Y, and Z, this would better prepare you for institutional grade capital like ours. So
Mm.
it's somewhat actually of a roadmap to help the business. And then once they've achieved some of those milestones, they can come back to us, and then we can actually, really get serious and put a facility together. And we've had that happen several times. So that's also creative. So to your point, if it doesn't work for us for X reasons, we'll try and guide and point to a different direction that may be able to help. And then if it's still maybe an opportunity for us, but the timing isn't necessarily there, we'll actually lay out certain areas that the business can work on. And then, once it's achieved, we can reopen that conversation.
So, if you don't mind, I'd love to get into a little bit more about you personally, George, because the one thing that really drew me, to speaking with you is, you obviously take very good care of yourself. You're obviously very disciplined, and you're intentional about everything that you do. That you're the type of person that I like to be around, that I like to learn from, that I like to grow with. Can you
Appreciate
get
that.
into a little bit about what makes you, like, what are the things that you're doing on a daily basis that really help you to continue to grow? Because listen, two successful exits, you're at the point that I want to be able to work for the love of the game and not for, anything else. Like, that's the goal in life for me.
Yep.
And, you're someone that I look up to in that respect because you've done that. What are the things that you're doing on a daily basis that's setting you up for the kind of success that you've had all these years?
So first, appreciate it, and candidly, I look up to you as well on a number of different fronts. So again, I think we're learning from one another. Um, I would
Thank you.
say when I take a step back and look at the achievements, but also look at the number of lessons learned, um, it's oftentimes come down to how I've always embraced this notion of plan to make plan. So both on the personal and professional front, my friends always tease me because they know the saying of like plan to make plan. Like that's definitely one of my mottos. If you're not planning to make plan, then what are you actually doing? I learned that from a very young age, and I brought that into my corporate roles and was very ruthless with myself in making sure that I would achieve or exceed the plan. So there were no other alternatives. um, I think in order to be able to execute on that, it does take structure.
Hmm.
So I am someone who likes to structure, the different chaos and twists and turns that you get on a daily, but structure also, what is within your control. And of course, again, that means scheduling what you need to schedule, but also means how you're structuring your personal and your professional life, whereby I see it very much as an integration of the two. I've actually never really believed or preached work-life balance. I've
Hmm.
always preached a lot more work-life integration. I
Yeah.
think I think you have to embrace and accept that, and then this is not for everyone, but that you are going to spend a lot of time at work. So it can
Yeah.
either be time that you enjoy, that you learn from, and that you grow from, or it can be time that you are just counting down the minutes until you have to get out of work mode and go home. I would rather not be in that latter scenario. I've never wanted to be. Um, I've been fortunate where, again, both my parents are entrepreneurs and I had the option to work for them and take over the
Hmm.
businesses. For me, for whatever reason, I don't like things that are easy. So I saw that as the easy path, and I didn't want to do that. I wanted to honor their legacy and still help them, but that wasn't for me. I wanted to learn and do something with my own path.
Yeah.
So I think that as well is really, not tolerating just the bare minimum. I feel like sometimes folks inevitably start tolerating minimum expectations for themselves and for those around them. And then the other thing you mentioned, discipline. Discipline is key. Intentionality is key. So I would say the last thing that comes to mind is measurement. So
Hmm.
what gets measured gets done. I measure pretty much everything when it comes to my personal and professional life, qualitatively and quantitatively. It's the only way that you can understand patterns. You can actually achieve some pattern recognition, understand what works, what doesn't. What does your body respond to? What do you respond to well? What don't you respond to well? And then you extend that to your team, to your direct colleagues, to your extended teams. And then that's how you're also able to understand, are you on track to making plan or are you not? And if you're not,
Yeah.
you would rather know that ahead of time and proactively so you can course correct, right?
Yeah.
So there are some of the habits and or approaches that I would
I,
speak to.
I appreciate that, but now, do you mind if I push you a little bit more on this?
Of
I mean,
course.
is there anything actionable that that the listeners could kind of take away with, whether it be personal or
Yep.
professional? So I love plan to make plan. Like that's an awesome one. As far as tracking and measuring, I mean, me, with my fitness stuff, I've literally tracked everything. I
Same.
keep a journal every day.
Yeah.
I've actually recently kind of implemented EOS to my own personal life, right? Where I'm actually looking at my
Same
10-year
actually.
vision and,
Yep.
what's my 3-year goal? What are my quarterly rocks? Like
Yep.
that's what I'm doing on a daily basis to do that. Um, what kind of actionable things that somebody could do now, whether they're in, a professional role like we are, or just, any type of a role, what advice would you give people?
Yeah. So happy to offer a few ideas. I love your last bit around implementing EOS on a personal level. I actually recently started doing that less than 60 days ago. And I think it also provides a different layer of structure.
Yeah.
So that's one thing to take away and learn more about. The other tool that I feel has been life changing is implementing an ideal week. So we're really going ahead and mapping a full 7-day schedule and
Yeah.
carving out and blocking every single day the different areas where you want to meet with the outside world. So these are blocks where you are looking to meet with, potential partners. This is focused heads down time where you need to do, real intentional work. This is other time where you need to focus on yourself, your loved ones. So actually really mapping out a 7-day ideal week and what that looks like. That I would say has been life changing. And I started doing that less than 12 months ago.
Hmm.
And it's allowed me to really find that work life integration. It's allowed me to achieve a lot more personal milestones that I kept kind of brushing off, like more things that would make me happy.
Hmm.
Because I always tend to prioritize work. So definitely look into mapping out an ideal week. Other tidbits would be make sleep non-negotiable. So really managing your schedule around getting the right amount of sleep for you. Everyone's a little bit different. There's the 6 to 8 hour range that most data is supportive of, which is pretty spot on. But everyone's a bit different. My kind of sweet spot is either 6 or 7.5. As soon as I don't get that, I am not on my A game, and I know that fairly quickly. It's just unhealthy too. It has a compounding effect. So really making it a must and a non-negotiable. And two other things would be I do work out 3 to 5 times a week. I mainly do it for the mental health benefits, to be
Absolutely.
really candid. I think the physical side is more of a byproduct, and a nice to have to a degree, obviously.
Hmm.
But it's the mental health where it helps a ton. So incorporating that, finding what works for you, either it be CrossFit, either it be the gym, either it be, Orange Theory, you name it, just
Yeah.
really being active. And then hydrate. I mean, oftentimes if you're tired or if you're not able to focus, it's mainly because you're not hydrating enough.
Yeah.
So those would be some of the actionable suggestions.
Cool. Are you supplementing with a lot of electrolytes and things like that?
Yes. So
Yeah.
I actually have different packs when I'm traveling. But yes, because I try to eat a bit healthier and not processed. I actually probably wasn't getting enough salt. And
Yeah.
salt is good for you, the right salt. So
Yeah.
yes, electrolytes are key. I'm prone to migraines, and that's played a huge role. But the right quality of electrolytes, so you want to make sure that there's not, a ton of ingredients, that there's not a
Yeah.
ton of sugar and artificial flavors. So you always have to look a little bit deper into
Yeah,
that
for sure.
ingredients
Well,
list.
I'll let you try my snake juice that I drink on a daily basis.
Yeah.
I have my whole hydration thing. I mean, I know you and I can go down a rabbit hole, but I think you definitely commented on an article that I wrote recently about you know being make a living by being you. And the one cool thing is, George and I are having dinner tomorrow night with a colleague of mine that's on the
Mhm.
West Coast as a specialty in media, et cetera. So it's going to be a good introduction for George. But what I find is that George and I have known each other for less than a year now, but he's a type of friend that I want to have. And now I'm not going out to a business dinner anymore. We'll talk about business, obviously, but I'm going out to dinner with a friend
Mhm.
and we're going to talk about the other guy that's joining us for dinner is also into fitness, also into all these things. And like,
Oh, cool. I didn't know that.
it's a really cool opportunity for us to talk about all these great things together,
Yep.
but it doesn't feel like work at that point.
Yep.
And that's the thing that's like hard for my wife to sometimes understand. She's like, so you're going to the city for dinner with your friend George and your friend Phil. And it's like, no, but we work together on a lot of
Yeah.
deals. But it's like, yeah, but that's the cool thing about my job is we can be friends too. Like that's a super powerful, super
Absolutely.
powerful.
It's work life integration, right? I look
Yeah.
forward to Mondays. I look forward to when working with you, having very very deep dive conversations on real projects that we can collaborate on, but also learning about all the other stuff that
Yeah.
makes Michael, things you learned, and I feel that's what makes it all enjoyable.
Yeah.
People sometimes again either overlook that or tend to forget it, but we only have one stab at this thing called life, right? So why not make it as enjoyable, as fulfilling as possible, and also bring your authentic self to every single
Absolutely.
scenario. I don't believe in any other approach. That way, you don't have to pretend to be someone you're not. That way, you can actually show up in a genuine manner, and people will remember you for who you are, instead of trying to conform or just fit into a certain mold, and then you kind of fade in the background because it all sounds and looks the same.
Yeah.
So yeah.
I have one thing before we go that I wanted to ask is what is the best way for people, to get in touch with you? I mean, obviously, when it comes to, direct introductions to Metropolitan, I mean, anybody in my network, happy to connect you with George,
Appreciate
personally,
that.
make a warm introduction, make a nice handoff. But if people have just any general questions or want to follow along, I know George is very big on LinkedIn, like I am, constantly putting out a lot of good information and everything out there. But what's the best way for people to find you, George?
I'd have to say probably LinkedIn. My virtual
Cool.
door is always open. So would encourage folks to directly connect with me over LinkedIn. Happy to pursue conversation together, and get to know one another. So LinkedIn would be the best path.
Very cool. Very cool. And then I have, my $1 million question I like to ask everybody. If you're not super prepared for this, but I'd love to hear your off the cuff answer on this. But, when you look back on your journey, both, personally, or professionally, what's something that seemed small at the time that really ended up changing everything for you?
Oh wow, that's a big question. Um, it's one though that I've thought of before, because I'm very big on self assessment and
Yeah.
understanding from mistakes and also from opportunities, like what made them either failures or what made them successes. I would say what's really interesting and why I love your question is, when I looked back a few times at different chapters, it was oftentimes the micro moments that made the biggest difference. So I can maybe share two examples that come at the top of my mind, but one, both of them are people, so very people oriented. Hence why people are everything, and people are relationships are important. But I still remember Nora, who was a senior director at Bell. This older lady that had just such a presence, so much experience, and really a leader that like I looked up to. I was the youngest manager in her team, and she really believed in me. So she saw the potential. I think I wasn't even 21 at the time. She said, "I know you're going to go places, and I want to give you that chance." And it's thanks to her that I was able to get into the enterprise space, and then the enterprise space completely changed my career. Relative to exposure, relative to experience, relative to the size of deals that we worked on, so I owe a lot to Nora there, and I owe a lot to Nora based on where I am today, and also that would seem like a small amount of time to say, hey, like I believe in you, and then following it through with an actual promotion, and then where it took me from there. Um, and then the other micro moment is one of my last roles at Bell. I had the opportunity of leading all of the largest independent telcos in Canada, and I would spend time with. I was responsible for the relationship with all the CEOs that led those independent telcos. And in the micro moments, that I spent with some of those CEOs, a few of them made me offers to join their teams, and one of them, his name is Frank, made me an offer that I couldn't refuse, and that also changed, my trajectory. So I remember we're having dinner. He ordered wine because I don't drink. He was trying to say, let's toast because I want to, offer something and celebrate something that I think is meaningful. So order some sparkling water. And that's where he made me an offer to join the team, and that also changed my career tremendously. Being able to move from very large public company to a mid-sized company, being given the opportunity to scale it, and then put it on track for it to sell successfully. So it's those micro moments. It wasn't in both those cases there was a lot of things that went into it, but it was really the micro moments and the relationships I had developed with these two incredible individuals that made all the difference.
Well, I think my biggest takeaway from today is not that I didn't already know this myself, but I hope the biggest takeaway for the listeners today is relationships are everything in this world. They really, really are.
Absolutely, relationships are everything, and relation development is key, and it is a human to human business at the end. And well, regardless if you're in B2C, B2B, B2B2C, it is still very human to human, and people sometimes tend to forget that.
Very true. Very true. Well, I'm lucky to have you as a friend and in my life,
Likewise.
as a COI and business associate and friend. I look forward to our dinner tomorrow and to many more good times in the future. But George, it's really been a pleasure to have you on. Thank you for joining us today.
Thanks so much for having me, Michael. Looking forward to dinner tomorrow night.